Okay, hi there traders. Welcome to Trade the Structure and the overnight market wrap. So we're going to go through the major markets from overnight, what happened in the US and European markets, a few commodities, just the usual. So we'll check out where the major levels lie and where we could expect some action potentially today and go into the European and US sessions later on. So it's a bit of a exit of safe havens at the moment. Safe havens are heading lower. You've got pretty much inflation is the key focus at the moment. Ukraine's got on the back burner. You can see that with the US dollar rallying, whereas gold is heading south. And gold's a safe haven. US dollar is too, but as they're talking up more and more inflation, US dollar is getting bought up as well. So yen is not really doing anything, which is a safe haven. Gold's not. It's heading lower, so it's actually heading down along with that sort of that move up, or in parity, I guess, to the move up in the US dollar. You'll see that in currencies as well. And bond yields are continually to tick down. Now, bonds generally tick higher as a safe haven, but they're heading south. So they're more focused on inflation, interest rate rises coming forward, going forward, that are pretty much in the pipeline. It's just, how much? If they don't do anything soon about inflation, as we mentioned before, this is going to get out of hand. If the Fed is reluctant to raise rates, at least to cap this inflation, to cool it, then it's just going to get worse and worse. And then they've got a bigger problem in their hands and really shock the market. So start off with the Australian markets, and then we get into Asian, US, European, and so on. So we've got the just a 5-minute chart of the SPY, the SPY Direct. You can see it's pretty much the same as the ASX 200. We've got a level down here which it bounced off on. So the market's pressed up yesterday. It chopped around just above that 71.26 level into the close, and then it pretty much was range bound between 71.72 and that 71.26 zone up until the start of the US session. So that was 2 a.m. basically at that high, and then it sunk straight away. Okay, so basically it was a steady move all the way down, where it did find a bid into this previous low, which I think was just coming out. It was just an overnight session from the previous night, so Friday night. And then it held up at 70.67. So to me, that there's nothing really I would be too concerned about, thinking, the trend has changed, because that is just a short squeeze. Okay, you got some sellers into here, right into the close. They don't want to exit. Anyone that's been sitting on a profit, you could say, if you got in somewhere here and you're watching it all the way down, it's 75 points in the SPY. Good gain. So that's just really shorts covering into the open, because you never know what's going to happen in the open with the ASX anymore. It's a bit like you think it's going down, US is down, they pop up straight from the open, and vice versa. So it's pretty much an each way bet how they're going to drive that market on the open. So that's why you got this short covering. Now that could easily pop up. We get to some lower high, we press back down through 67, even testing into 52. Now, if that does flush and this level starts to hold, then we're looking for higher lows and a bit of a drive higher, and a bigger squeeze of all these shorts. So that's the action I'd be looking for. It's been messy of late, so just be wary that if you come up to a support zone like that, don't just buy off the level. Buy here, wait for it to prove itself, or take out a level. So when you're buying in here, this move down hasn't broken at all. So if you just got a bid because that's a low, you could get flushed like that and jam straight back up, and then you're chasing your tail with 1 or 2 losses under your belt already. All right, over to the Asian markets. That's the Hang Seng. It's just been continually pressing lower. This is a 5-minute chart. I probably should have it squeezed up a bit more, but you can see that pressure's been well and truly down time and time again. So generally it's been popping up in the open and then getting it heavy later on. So it's been just dragging in some buyers and squeezing them out later on, or it has been sort of chopping into the lows, consolidating, and then heading lower later on. So whether it's with the US session or the second session of the Hang Seng. So for me, at the moment, they're anchored to the downtrend. We're holding at 19,400. It's just up here. Now that's a few hundred points away. So it's sort of in no man's land for me, even though we've got a 5-minute chart. That move down has been pretty strong, and that's kind of extended. What's that, 300 points or so? 250 to 300 points, that move down. So it could easily flush up into there, hold, and then drive down again. Okay, but we're looking at these daily levels. So we've broken through a daily level, which is that 19,605 zone up here, and we've got another low. Okay, so this way back when was a higher level. Okay, so it made these lows, popped up, made a higher low at that 19 before a big trend up. Now we're coming back into those levels. We flushed through 19,605, and we're still heading down. So it really didn't prove too much of a support area, and we're looking to potentially drive down into that, below 18,700, 18,780, back into potentially 18,365 to take out a few of those stops. Okay, so really for me, it's whether we open up, drive up, and then we get heavy, and we get a selling opportunity off a lower high, or we sort of flush, and we could easily bounce, grind back up, Still hold below that anchor level and then roll over later on. Now the Nikkei is yeah, it's far choppier. That had a big move down a while ago, and it's starting to bounce off some key daily levels. It has bounced off for a while, so we're really waiting to see whether there's going to be a bit more of a bounce on a daily basis, which is going to drive us up, or we're going to start to hold lower highs and drive back into that daily low. So for now, on the 5-minute chart, we've got this level holding 25,480. Okay, that held all day. So pretty much the market opened here. It was pretty much range bound. Any sort of push down to lows was soaked up, and we've got to push into new lows here, soak straight back up again, high, low, squeeze out all the sellers that start to build up, in this area, and from the open. They just squeezed straight back out again. Then we held this zone through here, high, low, pushed back up into the highs of 25,480. And then basically that was the start of the US session, went straight down. The thing is, we've found some buys again at 25,205. So it's not, it's not this level. It's a level from way back here. You can see that extended across. We're a level from way back the 11th. So it was only a few days ago. I say way back, but only a few days ago, really. So that's reacted up and off that level. So really for me, the open, what are we going to do around this 25,330? Are we going to flush it to get a lower high to work into for some shorts, or we're going to sort of chop around, hold a higher low, and we're going to extend back up to 25,480? So that's what I'm looking for today. I wouldn't expect it to gap down or gap up too far. If it's going to gap up, then you just got to see what happens on the first pullback. If it gets soaked up after a gap up, then you're looking for it to extend, like I said, that 25,480 level. Over to the US markets now. That's the Dow. Big flush of that zone, and that was, let's say, yep, right on the open of the US markets, 33,357. Flushed that high, drove straight down again. So I think it gapped up on the open, and then it actually finished with some minor gains on the Dow, whereas the tech, the Nasdaq and the S&P will drag lower. So it's really a tech thing at the moment. When it's sort of based around tech, there's no real, it goes back to that fear-based selling before at safe havens. If it's Dow's holding up okay, it's not really a fear-based selling. It's more into tech, which means it's more inflationary and interest rate rising scenarios, because they're very susceptible to interest rate rises, the tech area or the tech space. So to me, what I'm really looking forward to see if 33,025 can hold. Maybe it's going to play some catch up to what happened with tech stocks and the bigger S&P 500, and it could just grind its way down. Now, if Asian markets start to find some buyers and pop up, I wouldn't be surprised if we do pop up through this 33,025 area. Okay, I wouldn't mind seeing a higher low to work off if we're going to grind back up. So I would rather see it sort of press down, hold a higher low, and then start to work its way back and grind back up to 33,357. I don't think that'll happen, obviously, today. It'll be more of a US-based move, US session move, maybe a European session move, but European markets probably have to play catch up. They were up overnight. The DAX was up quite strong, finishing early. That will probably play catch up to what happened in the US markets. Here we go. We've got the Nasdaq. So this, you can see, it's just been driving down. So that was probably around the open of the US markets, was all one-way action down, and it has been one-way action down for a while. We've got levels we were speaking about a while ago up here. Held, drive down. So we drive down to new lows. We took out this area through here. So it's whether we're going to, and we've got a major support zone, 12,965. Are we going to sort of break the top end of, really I'm looking at this sort of boxed area, break the top and we get some back and fill back up again, or we break out below and drive down a bit lower into that support zone, even break through it. All right, so I think it's going to happen. It's going to be depending on what happens in the US session. So I wouldn't be expecting anything, or I wouldn't be trading that really up until the US starts to open and see if we do get that flush and start to back and fill, meaning we might get a drive down and then something like this take out. And that's just all they're trying to do is stop out below this level. Anyone that's been buying off that zone, looking for a bargain, potentially stop them out, and then we drive back up, or we go through and we start to hold it from beneath. Okay, so that's a clear scenario that could easily play out there, right? Considering what the Nasdaq's been doing. So just keep your eye on that one. Really, for me, that it's that level there, 965, probably at the start of the US session, and that's what we'll be looking at. We're looking at the Germany, the DAX. So that has been driving high quite strong, and it's been holding these higher levels, but it's coming into that level at 14,060, which has reacted off quite a few times. You'll see, it's reacted off here. We've reacted here, potentially here, and all through here, this zone through here, we've reacted off it as well. And prior to that, we drove into it, bounced off it, and then went straight through, bounced, in here and in here. So it's quite an active area where you just got to be careful if you're going to go long, that not going long into a strong resistance zone. Right, so really what I'd be looking for if we start to fade this, I'll be looking for either this level to break, maybe retest from below to get some shorts, maybe something like this. If that starts to hold, then a drive down, or we just start to chop around here and look for a shorter term, maybe drive back up to that area there. Okay, that's really more based around what happens in the European session, what kicks off in the European session. Now, if it does start to play catch up in the US because they're quite weak, we might drive down. They've got to worry about themselves, the European area, European zone, with interest rate rises now. They had the ECB just come out, held off. Unusually they've got high interest rates, high inflation levels. They were happy to hold off, so we've got a sort of month up our sleeve, I think, until they come out again with interest rates again and what their view is on inflation. Now they're all trying to hold off as long as possible. Okay, start raising rates. That's the start of a new cycle. Okay, and this sort of boom in the markets, this bull market, I would expect to come to an end. Okay, and that's what I've been talking about for a while. It's the finer details we're looking at rather than the bigger picture. All right, so that was DAX. Now we're looking at the UK. Now you can see through here. I'll just take that off, change a bit of colors. It was well contained through that zone there. Okay, so that was the start of that was yesterday about 12 o'clock. So you started a European session on a 15-minute chart. So we get it back to about here. Okay, so the market sort of drove down and was pretty much range bound right through the session there. Okay, you can see there's been range bound for a while now, a few sessions now. So really, are we going to drive down? Which means this level has been quite active, and it goes back to right into here. You can see it's been quite active as well, like the DAX. It's reacted down off that level, down off that level. We've got a higher low holding, like a major higher low holding at 70.60. So from here, are we going to really break to the top side of this sort of box, or we're going to break down through the bottom? Okay, which we mean break down through the bottom, sellers are in play, lower highs in play, and you're looking for a breakdown and through 70.60. Break up, we're looking for more of a grind, and I wouldn't be surprised if we do break up, potentially the start of the European session, break up and then fade back off that 72.50 area. I find it hard to think that we're going to get a big drive up, considering inflation is back on everyone's radar at the moment. Currencies now, the US dollar has been just driving higher. So I didn't do a morning report yesterday, but it has been driving higher for quite a while now. So that US dollar rally is really putting pressure on a lot of currencies. The Aussie did okay when it was sort of chopping around, but now it's got a bit of head of steam to the upside, and we're back to inflation. That's driving down. So we've got big reaction. As we mentioned a while ago, that's a daily level busted through there, and you really got to be careful if you're driving into a daily level, a daily zone, that you're not going to just get all these longs stuck it in, because it's been pretty much one big move from way down to 71.05, driving higher, holding higher levels, all the way up. Okay, stuck it in some buyers, so it's got a lot of juice on the downside to drive out. And that leg down there, we had that pop up and we just extended. So really, this area could be quite active. We'll have to wait and see. The market is still pressing down. So that's your volatility projection there, which takes us into that 71.80. If the US dollar keeps going higher, this will probably pierce that level and maybe drive a bit lower. Just because I've drawn that volatility projection doesn't mean it's going to stop there. It just means it's a zone where it makes sense, where buyers could start to look to step in and support. All right, but for now, it's not doing anything. We've got just get colors in there. We've got sort of this zone through there. It could easily drive down. So the anchor to this little minor move is around that 72.07. So if it keeps driving down, you keep following the trend down until we get a decent, we might get a flush of that level and a decent rally back up, and you got a higher level to work off. Okay, you get something like that, some higher levels start to hold and then break to the top side. You're looking at all those shorts to get squeezed out. Euro, it doesn't want to come up. There we go. So the euro has been under pressure because of the rally in the dollar. And then you've got a little minor double top here at 109.90. It's driving down, so you've got this support zone, which is held before at 109.35. So it's going to hold again. That's the level. So I'm looking at either that level, it's going to bounce off that level, or we might get some sort of pop up and a lower high to work into. All right, if this double top's going to hold. Okay, so really the longer term trend, it's kind of repeating itself. You've got double top up here, it leads to a sell-off. You've got this retest, not so much a double top in here, big spike on the news, into that level 110.30 and then a sell-off. Okay, we've got this bit of a grind back up. This looks like a prime area where it could easily hold, and we get a sell-off. So it could easily just drive through 109.35 and drive straight through 109.03 and keep going lower. Pound. Now the pound has been quite active on the downside as well. You can see that's just been driving down. We're on a 15-minute chart, driving down, had this little pop up at 131.88, held that minor lower high, and continues to go down. Okay, so you get little pullbacks here, or I guess contraction we call it. So that's expansion, some contraction, just squeezing out some of those shorts, and then rolling over again. So at the moment, we're still in that rollover phase and potentially just heading lower. We've retested that 130.88. So for now, it's really to see if we can pop, get a lower high that holds, and you can sell into that. US yen, or one more move. If you start to scrunch up that chart a lot, you've got a lot of action sort of choppy, rangy through here, and you're working off the ranges, as in you're working off the outside levels, the resistance and support, whereas now we've got a trend move, big trend move, and it's kind of getting ahead of itself. Now this level up here, 118.55, is a daily level. Okay, it's a good, strong daily level. So I would expect us to expand up to that level and then see what happens. Okay, so I'm not really keen on taking a long and late in this trend because it can easily start to get flushy. Okay, and by flushy, I mean look to where sellers start to jump in. They start to jump in a bit early, build a position around this 118.55. Okay, but for now, it's heading higher. I want to see what happens up there. If we get, pushing to that level, flush it, back below it, hold a lower high, then it's a good selling opportunity. Okay, gold is here. So that there, it's just been daily level here, daily high is 2070. So no reason to buy it up there. You start to get this lower high jump in, of course, you're going to get a bit of a squeeze. So once you get that squeeze and we started pushing into those lows, it's where to from here. Okay, so where to from here, we popped up, held 2003, and it's been a slow grind down, squeezing out more and more buyers. Like I said, safe haven is not the play anymore, and that's probably pressuring gold. So we know it's dragging a lot of buyers on that move up that could easily get squeezed out. So where to from here? We could be looking at this level to hold. So I want to see what happens around 1950. It could easily keep driving down and keep grinding down. So I don't want to be buying it straight off that level, hoping that it's going to pop up because I've drawn a line. I want to see some higher lows hold. Okay, that's the key for me. You might flush it, hold a higher level. We start to hold some higher lows, then I might look at all these shorts getting squeezed out. All right, but if we don't, if we start to pop through, hold a lower high, and we continue to drag our feet and really grind down, you don't want to be getting long because we can easily head back down to, we've got these levels down here. So you've got quite a few levels below it, and even after that, 1866, so 1886. What am I talking about? Okay, so gold, we'll just keep an eye on that. We want to see how that level reacts at 1950. Now we've got oil. Oil has been under the pump. Haven't really checked fuel prices. I've got to go fill up soon. I was hoping that I can hold off long enough where they actually start dropping it, which I'm probably hoping for the best. But yeah, fuel at the pump is not really changing. I think it's around $2 where I am, $2 a litre, and gold and oil has come off the high. So when is it up around that 129.50? It was 170. Now it's gone to $2, and we backed off quite a bit. So they're just playing, argy-bargy. It wouldn't be surprised if they're trying to, hold off dropping it up until we got a few weeks till Easter comes. But they want to sort of hover around these higher prices for that holiday season. Okay, so for oil itself, that's what we're trading. Not worried about fuel. Well, I am, but fuel prices, higher fuel prices obviously add to inflation, and there's a big concern. News are loving it because they're popping out all sorts of fear-based, fuel prices. Look at the price of fuel; it's going up. We're expected to hit $2.20. Where I am on $2.30, fuel prices going a lot higher. Meanwhile, crude has been heading down, okay, off these highs. So a lot of longs that are built up are getting squeezed at the moment. So lower highs in play. You've got this level here, lower highs, lower highs, lower highs, lower highs. We're looking to that low there, which is about 99.80 or so. So it could crack below 100 again. It did push below 100. We bounced back, so it could continue to hold lower highs and push down to that 93.87. We'll see how that goes. Next, copper. Now we've got copper is pressuring lower. You can see it's held this level in here a while ago, probably, what was that, on the 11th, and then been pushed lower. So it's now broken through another level at 155, this zone through here, broken through, so we're looking down to that next level, 98.18. All right, so where we've had some support previously, you can see it's been bought off that support quite a bit. We're going to go back into that and test that level. That's what I would expect. I think MACD's in a prime position. They've got some selling pressure. The buyers have tried to lift it back up. That lower highs in play could roll over and get some more momentum to the downside, which could easily drive it down into that 98.20, this area through here. All right. Over the last couple of look at just Bitcoin and Ethereum, a couple of cryptos, they were sold down the start of the yesterday session, the Asian market session, then bounced, okay, then held up. Now, Bitcoin looks a lot better than Ethereum. Bitcoin looks like it could hold, and we start to get, so I'd be looking for ideally something where we get a higher low to work off and a drive up and through 39,500, potentially to that level 4270. That looks a lot better than, say, what we're looking at with Ethereum. Now, Ethereum has bounced back since I've drawn this chart, but we're going to contend with that 2557. All right, so lower high in play, 2609. Are we going to sort of chop around here and hold and go back up to 2609, or are we going to flush that level, bounce that, get a lower high to work a sell into? Okay, we'll just have to wait and see. All right, guys, that's all I want to talk about. Thank you very much for joining me. Looks like I'm going to have to clean up a few of these, the Chrome, clean out a few of these, what do they call them? Cookies, just to make it work a bit faster. But yeah, we'll get that in shape for tomorrow's. So thanks for joining me. Good luck today. Stay safe, and we'll speak to you soon.